Investors and traders, welcome to the channel Market Chart Pattern. Today is 11th of September 2024. I hope everyone is having a great day. So we'll be taking a look at the key markets for the US market, and as always, this video is for educational purposes only. It is not a financial advice. So let's start by taking a look at the chart of S&P 500 E-mini futures. So we had the timing come in yesterday, and with the timing, we always give it 1 to 2 trading days on either side of it. And what we have seen is yesterday was also a positive day for us in the marketplace, and also today, especially. Look at this really strong looking candle, and I really wanted to show you this on a smaller time frame, because what the market has done today is something really important. So I want to show you what it is. So if you're interested in our timing model for new viewers and new subscribers, and then towards the end of this video I'll put a link to that video from yesterday. Please have a look at that. The timing came in on the 10th of September. Okay, so what I really want to discuss is that you have heard the term of reversion to the mean quite several times, maybe on CNBC or elsewhere. But what does it mean actually? So, an asset class such as S&P 500 or NASDAQ, these are mean reverting asset classes, and this is why we see, if you're watching them on an intraday basis, we see the price always fluctuates back and forth, back and forth, back and forth. If you were to compare this with something like treasury notes or bonds, those have much smoother intraday trends. Now, those markets also revert to the mean, but the frequency of that is a little bit different. And in my opinion, all asset classes at some point in time will revert to the mean. So the question is, what is the mean? So this will try to take a look and try to understand in this video for S&P 500. Okay, so I'm going to go back down to about 1 hour of time frame. Here we go. So here, one of the, I think I've spoken about this before as well. So what happens is that um, we have a weekly mean that we get from the prior Friday's close, because I call it the mean, because this is where the week ended, where the bulls and the bears, the buyers and the sellers, they agreed on a price, and they thought to be the fair price for everyone, so they close the week at that price. So we take that, and then that becomes our mean for the following week. Okay, now during that week, what happens is that as the market is moving up or down, then there is also a theoretical mean which is actually moving accordingly. Now, what happens is that two things will happen: either the market will actually move really quickly, so the mean might have to actually catch up with it, or what could also happen is that at some point the price has moved really quickly in a short amount of time, then the price might actually come back and test the mean. So what happened today is something really interesting. So if you just focus on this price action, so on this, let me actually go down to a 30-minute chart. Here we go. So we have more price action to take a look at. So today the market opened, and since yesterday, in fact, since 8th of September, the market has actually been rallying, and it has rallied quite a bit. And today we had the CPI data come in, so the market opened, and this is the candle. I'm in the United Kingdom, so that's set to 14:30 p.m. My time, and the market just sold off really hard for half an hour, 1 hour, and then found a bottom at 1.5 hours time into the trading session. Now there's something really interesting which was happening around this level, so we normally take a look at our ratios. So there we go, and we can see that we had the 78.6% retracement coming there. Then there was something else happening around that point as well, and if we just take the expansion of this swing, let me actually get the and here we go. So it was exactly 1.618, expansion of this swing here. So we have a confluence of two things coming together, but there was also one more thing which was happening around that. And if let me just go back to Sunday night when the actually market had opened around here, and that is actually around 54.10. So 54.10, there we go. And the market had closed on Friday, 6th of September at 54.03 and 3/4. So 54.03 3/4. Here we go. So what the market did was basically it just came back and tested the open of the new week. So the market had actually opened up with a little bit of a gap between the Friday close and the Sunday night opening, or the Sunday evening opening at New York time. So what the market did was basically it came and just tested this um, opening range for the week for the new open. So when I saw this, I was watching the market intraday. I knew that we had so many of these levels coming together, and what the market or what the price had done is basically it had actually reverted towards the mean. So it had actually come very close to the price level where the prior week had closed, and the new week started with a gap. It came and it just tested this. Sometimes the market is actually coming back and really closing the gap, and sometimes just coming really close, especially when we have a number of these Fibonacci ratios coming together. And since that, the market just did not look back at all. Looks like the buy algorithms were started, and it was just a one-way freight train, and it just moved really quickly, giving no on the 30-minute charts, just no pullbacks. And if you were even watching it on 5-minute intraday charts, there was just not an easy way to get into the market, even if you wanted to buy it. So here, this is the kind of concept which is related to the standard deviation levels that I used to put out together, and I'll think from the next week I'll start doing those again. And this is why it's really important to, when the previous week is closing, take a note of the levels for all these indices. But let's say S&P 500 E-mini futures in our case, in this example, make a note of that, of the close, the weekly close, and also the Sunday night opening. And of course also make a note of when the regular trading opens, just for the very first day of Monday trading session. And then if you keep a note of this, you'll know that certain things will begin to change. Will tell you when the range is expanding or contracting. So that just shows you, that will tell you the volatility in the market is actually increasing or decreasing. So something really interesting for you guys to watch. When why I will do that. I will put out the standard deviation levels, but how why that last Friday's close is really important. So we saw a really good example of that today. So I think in my opinion, the market is bullish. So the bull is back. So we are actually likely to see now higher prices. This scenario of market doing ABCD, I'm going to take it off for now. So I'll be watching the further price action, but now it already depends upon whether the market is actually able to take the 6th of September lows out. That is last Friday. But with this kind of positive or strong price action, the chances are actually, we might see some trading range behavior, but it has taken out these 6th of September bar highs with quite a lot of power. So I think we're going to see higher prices, and of course on the weekly chart we have some higher targets as well. Here we go. So at least I am this is something which I'd previously mentioned, that I was expecting more of a trading range and not the 5th of August lows to be taken out. So I think till sometime in November, early November, we are likely to, the direction is towards the upside in my opinion, and we do have, at least in the S&P 500, this big ABCD to be completed. So probably we're going to see new all-time highs actually coming at us in S&P 500. Now let's take a look at Nvidia. So there we go. So Nvidia stock is today a really strong performance, and if you remember, we were discussing right here that if it would break down the 38.2% retracement, we were looking for lower price. It got support right between the 61.8% and 78.6% retracement, a little bit of a consolidation, and today a sort of a really rocket ship kind of a move higher. So that is really good. It's just gone back into this gap formation. Let me actually remove these so it's really clear. So the important thing is this trend line has been held. The support has come in between the 61.8%, 78.6% retracement, and in my opinion, I think this market is likely to move higher. And of course, if it is able to break above this trend line, so breaking above this wedge formation, one of the things about these triangles and wedges is that when they get broken, the move is really accelerated move in whichever direction it eventually breaks out of. So what is possible now is that, assuming this is a little bit early to call this a pointed low, but here we go, we could be seeing ABCD, which is going to go and test these highs out, maybe make new all-time highs. And on the weekly chart, of course, we had this pattern we were watching. So that ABCD pattern is still intact. So 155, that is in my opinion where this market could actually go for Nvidia. So while we are taking a look at this, let's actually go back and take a look at the NASDAQ 100 through the eyes of the E-mini futures, and what we can see is a really strong candle formation, bullish candle here as well. So this was a minus 3 standard deviation move which took place on 6th of September, and this is very rare for this kind of a move to happen. And we had perfect patterns completing. I'm not going to go into details of those. You can watch previous videos, especially the video of the last week. And so we discussed that pattern on the 4-hour chart. I'll just quickly show it to you for the new viewers. There we go. This orange pattern, there were several ABCDs completing right here, and what we have seen is actually market moving higher. So let's see, there is going to be some retracement levels here. So the 38.2% is gone. 61% comes around 19,383, but I think this market is actually moving higher and is moving into this gray zone here. So 20,200 is the 78.6% retracement. The chances are it is likely to go there, and we are most likely in this ABCD formation like this, which could actually see this index go and retest these highs there. So I will wait for this one. I'm going to delete it for now because I want to see some of these resistances being taken out to the upside, so that's going to be really important. But yeah, we have these major indices, S&P 500 and NASDAQ, really positive. But I think there's something really interesting happened is actually in the Dow Jones. So we'll take a look at this through the eyes of the E-mini futures. So you look at this bar, it was down so much, really down. I think it was down maybe 600 700 points at one time, and then and what it did is basically just retraced 50% of this entire leg, and it just closed positive for the day. Also, it closed positive for the cash market, you can see that pretty strong move there. And here we had an actual open gap here. This is what we spoke about as well in the past, that market was likely to come back and close this, and it has done that. This is why I'm getting more bullish on the market, stock market now. So the let's try to see this on an hourly chart. I think there was an ABCD pattern formation. um, and let me see, was it a perfect ABCD? Here we go. So this is like kind of intraday stuff. There you go. So there was a perfect ABCD, and I think there was also a 1.272 expansion of this. Here you go, to the tick. You see how, how accurate these numbers are. Well, one thing I'll tell you about these Fibonacci numbers, these ratios, uh, you know in fast moving markets, the kind of markets that we are having now, these numbers, these ratios, they start to get hit left, right, center. And I mean, you can do this stuff yourself, and you will also come to the same conclusion, that these numbers begin to get hit left, right, center, whether a lot of these markets are now algorithmic, whether these are built into the algorithms. But the reality is that when the algorithms were not really operating in the market that much, let's say in the early 90s, or even if you can go back and back test this data in the 70s, these numbers were getting hit. So there's something important to them, but the way you need to use them is really, really important. You just can't randomly throw take 2 points and try to see whether these things work. You need some kind of more education, and more experimentation and backtesting through your own efforts, and then you will begin to see things unfold. This is Dow Jones. Let's take a look at the Russell 2000. So Russell 2000 retraced right to the, I think it's 78.6% retracement now. Actually missed it, which is good because this means it's a little bit stronger. But this one needs quite a lot of work from a technical perspective. But the good thing is it also closed positive for the day. Now we'll have a quick look on the dollar. Here we go. And here we go. So the dollar is trying to show some signs of strength. And we have the PPI figures tomorrow. But I believe now what looks like this 102 level is going to be pretty strong resistance, because that's the 38.2% retracement. And we are likely to do this ABCD right into it. So that's going to be a pretty strong point, because we have a confluence of two things, plus we have this a little bit lower, this bit of symmetry as well. So yeah, I think at the 102 level, dollar will try to get there. Pretty strong resistance. Should it get above that, and also with structural resistance from structure here as well, should it get above that, then I think 103.50 is the next kind of destination for the US dollar. While we are at it, let's take a look at the Bitcoin. So let me actually bring the correct one that I'd like to take a look at. Crypto, was it? It was this one, yeah. So here we go. So you can see there are several of these ABCD which completed, and the market has just been sideways since March. And the reason it's been sideways since March is, let me quickly show you this one by bringing in the correct. Here you go. I have to switch it to the log chart. So this is the Lucas time spiral. It is that hidden secret cycle that is operating in the Bitcoin market, in my opinion. And then I'm not going to go into the construction of this. There's an entire video about it. So we had a really key Lucas cycle completing in March. 13th of March was the high, where we had this 152 weeks, excuse me, months. Here we go, right to the 1st of June 2011, and we have just seen the market go sideways. So the month of September, if you add 7 to that, we get September. So in my opinion, the month of September is really, really important, because the market should get stronger. If it is not, if it is, it's okay in my opinion if it remains range bound. But then we'll begin to look at another 7 months. So the March will be the kind of the time frame where the market is actually uh, perhaps make a new high. But it looks like it's just gonna be a range bound affair for quite some time. In in Bitcoin, if it remain the month of September does not make new all-time highs. Just my thoughts on the Bitcoin, but at least Bitcoin is technically in a range bound formation on the downside. Just keep on watching this really these lows of 50,000, because getting below this is that's where it gets pretty bearish. So keep on watching this 50,000 level, this low which was formed around here in Bitcoin. Now, yeah, so the market I really wanted to show you is the treasury markets. Here we go. So we found some strength coming in the shorter end of the curve. This is 2-year treasury, which is fine because it's just the structural support here. So tomorrow is the PPI figures. Let's see what's going to happen, but I think the market is just going to go a little bit sideways here. Fair amount of support struck from the structure here, but breaking below this, wow, then we are looking at yeah, this whole thing has formed the McDonald's pattern, which is the arcs of McDonald's. So I haven't drawn those here, but you can actually visualize this like an M. This is your left arc, and then this is your right arc. And then of course this is the left shoulder head and right shoulder. So not exactly McDonald's pattern, but I really like to call it McDonald's pattern because of the arcs. So there we go. I think it looks like of course the market is telling us the Fed is gonna reduce, will embark on reducing the rates. The 2-year note is really telling us. So there is actually a little bit of a lag between what the Fed funds do. So when the Fed begins to actually act on their cycle, and what the 2-year note is doing that. I've done a video about this long time ago, where I actually showed you that sort of a relationship. But I think I'll do another video where I think it's kind of good to do a refresher of it. Perhaps over the weekend. It's really, really interesting how the 2-year is the kind of the yield curve which the Fed might be paying a lot of attention to, in addition of some of the other things that we watch. Really interesting on the 10-year. Here we go. So on the 10-year, what the market has done is it actually closed negative for the day. And we do have this big ABCD pattern completing here, but the market went a little bit higher. I personally think we are actually going for 116 test of that, and then a little bit higher is going to be the 38.2% retracement. Here we go on the weekly chart. There we go, 118. I think this is where it is going, but we could get some sort of a pullback in this market, and just closed negative for the day. But it's really a range bound market, to be honest. Let me actually blow it up a little bit. Here we go. Here we go. So you look at this one, it did close negative, which is of importance, because if you look at all these daily closes, they were all bullish closes. So the price closing higher than where it opened, and today was a little bit different because price closed below where it opened, but it's just a trading range of where, but the bears won in this case. And then if we take a look at the 10-year, the long bond futures trading range, like I mean, really, really tight trading range, but I was trading this intraday myself. It did provide fantastic opportunities intraday, but at the end of it, the bulls and the bears, they kind of fought together, and they thought that, okay, there's no clear winner, so let's just finish it at a break even. So this is what we got, and if my analysis is correct, and we are in the CD leg higher, then we are likely to see much higher prices or lower yields in the long bond futures, which should help with things like mortgages and stuff, because 10 years duration and above is the kind of duration the companies use to bring those sort of products out, and also for credit cards and stuff like that. So that's why 10 years is really, really important to take a look at. And just trying to think anything else we can take. Yeah, let's take a look at the European markets, because the European markets were doing something really interesting. So here we go. This is the FTSE 100. So this is the United Kingdom's market. So U.S. markets have been pretty strong today and yesterday as well, but the European, the FTSE 100, you can see that it's just going nowhere. Trading range and also negative. Really interesting is actually the DAX. Here we go. So the DAX was also in a trading range affair, where the U.S. markets actually rallied yesterday, Monday as well, and today, of course, huge rally. But the European indices were closed by that time, so we might see pretty good rally in the German DAX and FTSE 100 tomorrow morning. But just to reiterate that these markets are acting a little bit different to the American counterparts. So that's really interesting to watch. And here we go. Where this market is right here is the 38.2% retracement. So that's, in my opinion, a bull trend like this one. I call it a bull trend because it took these highs out. This is actually pretty bullish. And what it means is that most likely this market is now going for 19,160. So we'll wait and see what the price action will look like for us. And 5th of August was a big support level. This is where we had the 38.2% retracement of the October 2023 lows come here. So really interesting what is happening, and we also had the market symmetry here as well. So yeah, I think the markets here are at also German market at support level. So that's it. Thank you very much for watching the video. Good luck, good trading, and speak to you guys soon. Have a fantastic day. And if you like our analysis, please do subscribe to the channel. And if you do, then hit that bell icon button. And if you found this video of educational value, you learned something, you enjoyed it, then give it a thumbs up. Thank you very much. Bye.